This is Chad Toyne with a Friday, March 13 broadcast from Trader PhD. Before we talk about the grains and livestock, and then there's the coronavirus. I'm sick about talking about the coronavirus, but it's still in our face. 7 weeks ago, January 22, I was broadcasting to you guys about the Phase 1 trade deal. And then just 1 week later, that's 6 weeks ago, January 29, I had my first broadcast about the coronavirus, and this is what I said. There's this coronavirus going around, and it's been wreaking havoc on the markets. Not only is this virus contagious, but it also appears to be transmittable before the infected person has any symptoms. This outbreak has been compared with the SARS virus back in 2003, but this initial coronavirus breakout is spreading much faster than the SARS virus did when it started, and it's killing people. All of the markets are affected. You got stocks, bonds, gold, crude, grains, and meats. Everything is reacting in fear to this coronavirus, and the fear is justified. There's a lot of unknowns existing about the virus, and when uncertainty hits the markets, traders panic. And to give you a bit of perspective, the top of the stock market was posted 2 weeks after that. That was 4 weeks ago, February 12. And the stock market has been in panic mode ever since that top, along with everything else. Gold, bonds, crudes, grains, and meats, they've all been in panic mode. So when does all of this end? I'm no expert on outbreaks, but I do know a few things. Number one, China shut down places of business, and they started social distancing in earnest from January 23 to February 12. That's a period of about 3 weeks. Number two, if we say that the United States started in earnest a shutdown this week, then perhaps maybe we have 3 weeks to go before we start to open things back up ourselves. Number three, if we have seen or are close to seeing a peak in the panic here in the United States, there's still likely going to be a slowdown in our economy for the next 3 weeks. I'm going to guess that we've had the trauma, and now we're going to have a slow bleed as the stock market heads lower while we experience social distancing, the staying at home, the canceled social events. We had a meltdown in the credit crisis of 2008. The fear hit first, and it did most of the damage, and then a slow bleed ate away further at the stock market until we slowly got things under control. Now, with all this in mind, it's my best guess, my best approximation that the stock market will struggle for another 3 weeks. We're at major support here with the bottom today, and I'm going to guess that it's not going to hold for 3 weeks at all. I think that we may bleed to the next support level, and that is Dow 15,800. That's another 26% on top of the 28% that we've already lost. Then we can expect some confidence to come back. Then we can expect funds to come back into the markets. Then we can find some buying opportunities. And guess what? That puts us right into the start of the growing season for crop year 2020. Now, I doubt that I've nailed this perfectly, and it's nothing to bet on, but it is a plan which we can base some sane planning to make it through all this. With cheap energy and funds pouring cash back into all these commodity markets at the right time, crop year 2020 and investing 2020 might bring us some of the best opportunities that we've seen in years. So that's where we are with grains and livestock. Confidence needs to come back in before the money comes back in. I'm Chad Toyne, and this has been Trader PhD.